Hey, good afternoon, everyone. Happy Monday to you. It's January 28th, 2019, doing a Monday market analysis video, taking a look at the ES here and two trades that I took this morning. This is going to be a very big week here in the markets. We've got lots and lots of earnings announcements coming out. We've got economic news. Wednesday is the FOMC meeting announcement. We also have GDP on Wednesday morning. That will be a very, very cautious day of trading. So be very, very careful this week. A lot of times traders think that, oh, lots of volatility, this is going to be great and give us a lot of trading opportunities, when really all that volatility does in this type of environment where you have a lot of before market, after market announcements coming out, it creates a lot of gaps, and a lot of this volatility, this type of volatility, pushes the market around and can really, shake you out of a trade before it goes your way. The trade may end up going in the direction that you initially thought it was going to, but you're stopped out before you're able to, capitalize on that. So let's take a look at today. If I go down to the 30-minute chart, you can really see the gap here. Friday's gap up, today's gap down. Both Friday and today sort of a gap and then flat. I wanted to pull up the market profile and show you this was Thursday's close. This blue line. And then this is today's profile. And so when we gapped down this morning, we were very close to Thursday's close, so it was a good chance that we're going to fill the gap. Then we had all this consolidation over here to the left, which made for a good chance of us sort of being a sideways day, having a lot of resistance from the bottom of these value areas up to the top of the value area, and that's pretty much what ended up happening. But that was kind of my thought process going into the day. Okay, we've gapped down, we're close to filling this gap, and we have a lot of consolidation here as well from the last couple of days. If we take a look at today's first 30 minutes, we did have a nice little trend going channel to the downside. And so I first drew up, I've got the high and the low marked, these horizontal lines. Then I drew up the first trading hours only short and came in here. Noticed that we did trade at it. And so my thought process here was, okay, if we're going to be a gap and go day and like we're going to continue down, then it's going to happen from here and we may not get another opportunity. We may start selling off and just fall off a cliff. So I drew up the opposing long, and then once that broke, the 60-1/8, I got rid of that drawing and drew up the very first short, or the short after the 60-1/8 break in the direction of the larger trend. And I took this one at 26.30.75. As you can see, I was stopped out, but that confirmed that we're kind of going into a sideways day. So from there, it was just a matter of waiting for us to move to the top of the first 30-minute range and watch for a nicey tick that was a high tick that lined up with the high of the day, and that's exactly what we got up here. And so this led to a really nice short, highs of the day, fading with the nicey tick, shorting the first short after that high ticket highs, 38.25. And notice how this one we did not touch. We traded at the short before we traded at the 50% of the long. So the way I managed this, used 2 points from my first target, and then I drew up the long, trading hours only long, from lows up to highs. And when we started selling off here quickly, on the next portion, I like to use multiple exit points and the trail stop strategies. So small target for the first bit, and then the second portion I trailed here just by 2 ticks and put my stop. Ended up getting taken out here at 34s, or 34.25, I think it was. And then from there, the last portion, I just trailed the full the next 60-1/8. And so by doing that, market came down, broke the 60-1/8 of the long. So I started it at 37.25, and then we hit the target. So I drew up the next short, moved it down to 34.25 because that was 2 ticks above the 61.8. And then notice here how we didn't come up and touch the 50% retracement. So, if you're not in the trade, but you want to be in the trade, here's a situation where, you put your order out there, 32.75. Well, we don't touch it, and therefore you don't get filled. You're not in the trade. Whereas by strategically scaling out of a position, you can capitalize on these kinds of situations where the market doesn't come all the way back. So then just continuing to trail, draw up the next retracement and move my stop down to 31s, and that's where I was eventually stopped out here. And I was looking for us to go all the way to the bottom of the first 30-minute range. We didn't quite get there, but we were close. And so just by trailing more conservatively with that last bit, 2 points, 4 points, and about 7 points is what I ended up with there. And so with as little as 3 contracts, you can do all 3 of those profit targets. You can have a arbitrary target for the first contract. You can get aggressive with the second one, and you can be conservative with the third one. So, and then when you look back and say, okay, well, using that same 3 contract example, the stop out, minus 4.5 points for the first trade, and then a 2, 4, and 7, so you're at plus 13 points for the second trade. I mean, that win, which was not a monster trade by any means, easily swallows up the loser. You have a couple of losers inside of one winner like that, and then there's other situations where the market you put on 3 contracts. The market might go that 2 points, get you filled on the first contract, and then it reverses. So then you're more at, either a small win or a break even or just a small loss on those trades. And so when you end up averaging out your losers and then your winners, you can really look at those numbers and make you can make tweaks based on the numbers. And that's really helpful when you're setting your loss limits and having those parameters in place so that you can come into the day prepared. And then that preparedness is what gives you the confidence to place trades. But this week, be very careful and very, very cautious out there. Tomorrow morning, we'll be doing a live trading session. As always, you can check that out at eminimind.com/VIP. Just a good way for me to kind of walk through the charts as I'm trading and narrate things as I go, and I can answer questions throughout the morning. And as always, if you want to reach out to me directly, feel free. Tim at eminimind.com. Thanks, everyone, and have a great week of trading.